originally this morning, we were in a bull channel on crude, right? Remember that last chart we saw, the bull channel? Well, here was the high of that bull channel. And the news came out at 8:30. 8:30 news came out, and again, what it was dollar bearish. Now, isn't there a negative correlation with crude oil? There is, but remember, when does the dollar correlation fail? It's two reasons. Low volume, which wasn't the case this morning. The other reason is fear, right? Fear is the biggest reason why the dollar correlation will deteriorate. Dollar dropped based upon, of course, smaller hourly earnings, higher unemployment rate, and of course, non-farm payrolls are falling, significantly falling. So we saw the dollar drop. Now, why would crude drop? Because as the dollar drops, now traders are aware that when the U.S. economy slows down, it's deteriorating the demand for crude. Now, 6 weeks ago, we didn't know about the demand falling. So this would have been a correlation where crude would have jumped yesterday. All right? But basically right now, though, traders are fully aware that the economies across the world now are slowing down. People aren't buying products, they aren't shipping products, they aren't making products, opening factories, creating businesses. That's why the demand is falling. So demand is crumbling here on crude. Everyone's aware of it. And when they see the U.S. economy get hit like that with non-farm payrolls, basically a bearish sign for the U.S. dollar, that signals the crude traders the demand will continue to drop, which is the reason why the price dropped. All right. Now, if we were concerned about supply, that would be a whole different story. But we're concerned about demand right now. The global economy is slowing down. Manufacturing indexes are dropping, right? Jobless claims are rising. We're talking about QE3. We've been talking about this the past couple of weeks. So that's the reason why crude dropped when the dollar dropped. That negative correlation, right, broke free, and they both tumbled. Now, when the dollar dropped, the gold spiked up, and we did buy the gold today. We'll grab a look at that in a moment. But first here on crude, 8:30 news comes out, non-farm payrolls are dollar bearish. And we know exactly what that means for us because of the demand issue we've been talking about all week. And so we knew price should drop. And guys, when price drops, it immediately drops below 97 even, which is the previous low of day. We already knew this was going to be crude bearish, so we were positioned to take a retracement, right? New lower lows, I sold the retracement. And at 841, 96.73, I made my 19 ticks. Pretty sloppy, as you can see, right? The price action here, very, very sloppy here at 841. It didn't start slowing down until we took, well, until about right here. Until we got the lows here, and this is where we drew that price wedge. Remember I told you guys before? Off the highs, off the lows. Now we have a wedge, right? So there's now your price wedge. Okay, there's your price wedge now. Very, very fast speed, very, very fast movement from 8:30 to about 8:45. That was that sometimes it's too fast to move. Remember we talked about that, guys? Like I said yesterday, we may not get a chance to trade until 8:45. And that's actually exactly what happened today. We got exactly what we thought would happen on non-farm payrolls. Very fast, difficult to find an entry right away. So we wait. I get that one easy trade for a wave pattern short, and then by 9:45, right, here we are chopping around sideways. We go up, we make the high, that creates my bear channel now. It also creates my wedge, and here we are now inside of a wedge at 9:45. Remember what happened? I recall what was happening because we were killing time, joking around about whatever we were talking about, and at 9:30, 9:45, I said, wait a second, guys, let's get refocused. In fact, I think it was JC this morning who reminded me, let's get back to trading, right? And it was a great advice because we said, all right, it's 9:30, 9:45, what's our plan of attack? It was very slow, very sloppy, and again, at 9:45, we did the what if game, right? And this is an exercise that I encourage every trader to do every 15 or 20 minutes. What if price rises? What if price falls? And so we began to put together a plan of attack, and we said, what would happen if crude price rises? What would we do? What if crude price falls? What would we do?